Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
But a lot going on in Washington. This afternoon, we did see the peaceful transfer of power from Joe Biden to Donald Trump. And now, Carol and David, we're seeing all the pomp and circumstance around a normalized version of what we saw 4 years ago, which, as you mentioned, David, came at a time not just when Donald Trump was not around to see this happen, but also we're at the height of COVID. So a lot of the events around a traditional inauguration were
no
canceled.
jam-packed halls for luncheons at the Capitol that time around. And it's interesting you bring up the fact that we have this kind of return to normalcy. Yes, but with a slightly different flavor as we wait for the president now to make his way to a basketball and hockey arena in the nation's capital, where he's going to greet folks who've been standing in line for most of the day to get seats
unusual.
Inside there. That is unusual. They'll hear from him, and as we heard from Jody Schneider just a moment ago, perhaps there'll be a desk there on the floor of this arena where the president's going to sign some of these much anticipated, perhaps ballyhooed by his supporters, executive orders dealing with energy, with cultural issues. We'll see, in fact, how many of them there are and what's in them. And as our colleague Gregory Cordy gave us good counsel on just a moment ago, wise for us to kind of read through them and see what they actually do. But this is kind of red meat for a lot of his supporters and something he's promised quite a bit on the campaign trail and in this transition period.
Having said that, President Trump, in his inaugural address, vowing to prioritize America's interests with a golden age for the country while also taking on a radical and corrupt establishment, dare I say the swamp, if you will. So we're going to continue with our coverage over the next couple of hours. Coming up, though, in the next 60 minutes, author and political scientist Gautam Mukunda of Yale and the Fletcher School of Law and Diplomacy at Tufts University. Great view when it comes to American politics. Looking forward to that.
Also joining us this afternoon in this hour, Ed Mills, Washington policy analyst and managing director over at Raymond James.
Ed Price is going to be here, too. We've talked a little bit about trade, and we did hear from the president that there isn't going to be a kind of big marquee announcement on trade policy and tariffs policy today. There was some speculation going into Inauguration Day. Perhaps you would see an announcement to that effect in these executive orders. It sounds like that's not going to happen here for a little while. So, again, we're going to kind of piece together with you all as we see.
We're waiting.
We're waiting.
Right?
I mean, I think the anticipation is real, but we don't exactly know what we're waiting for in terms of quantity or quality of what's going to be in these executive orders, but we'll bring them to you as soon as we learn more about them.
Well, as we mentioned, President Trump launching his second term with a strident inaugural address that vowed to prioritize America's interests with a golden age for the country while taking on a, quote, radical and corrupt establishment. For more, we bring in Gautam Mukunda, executive fellow at the Yale School of Management, also adjunct associate professor at the Fletcher School of Law and Diplomacy at Tufts University. Gautam, also the author of the book Picking Presidents, How to Make the Most Consequential Decision in the World. Also with us is Ed Mills, Washington policy analyst and managing director over at Raymond James. Professor Mukunda joins us from Boston. Ed from Washington, D.C., a big welcome to both of you. Professor, I do want to start with you. What specifically did we learn about Trump's agenda from his inaugural address, the flurry of executive orders, and also from his off-the-cuff remarks a little earlier this afternoon?
Yeah, I think we learned more than anything else that he really meant a lot of the things that he said during his campaign. In 2016, the line about Trump was that we should take him seriously but not literally. This time around, I think literally was probably a pretty good guide. Maybe the most striking thing he said in the inaugural address, apart from sort of the tone, was the mention of the 1798 Alien Act, which is a power sort of best left in the dawns of time that was key to things like the Japanese internment during the Second World War. Not just being willing to invoke that, but willing to invoke it when you were being inaugurated is an extraordinary statement of how he both sees the breadth of presidential powers and how he's willing to use them.
I want to bring you also to the discussion, Ed Mills. You guys, in your note that you put out, you are watching those executive orders very, very closely. What in particular do you think all investors and all of the Bloomberg audience should have kind of front and center here?
Yeah, Carol. So when I've been talking to clients at Raymond James all last week, they wanted to know, are tariffs coming? The answer is yes. But guess what? Not day one, as we're finding out. What's happening with immigration? Is there an impact to the workforce? Is there an impact on inflation? What's happening on energy? Is it drill, baby, drill, or lease, baby, lease? And it seems much more opening up these areas. Are we going to get that regulatory freeze? It does seem very likely. And I think probably where investors that I talk to at Raymond James are most confused or most kind of debating is, where are the powers of the executive that can be invoked through these executive orders? And when do these executive orders just become a press release on nicer stationery?
Gautam, Mukunda, let me have you pick up on that. And I think we were kind of looking to this inauguration address for some direction, some clarity on sort of where the president was going to go policy-wise. I emerged from that with somewhat of a better sense of that. And then we had this, what was supposed to be a brief appearance before those who couldn't fit into the Capitol Rotunda. It was an entirely different speech with kind of a variation, kind of different issues that the president highlighted. How did you kind of process or think about those two speeches together, and what does it tell you about the direction of the presidency?
So what it tells me is that when the president exerts powers in these ways, the ways that are very hard to review and that bring in a lot of discretion, it also opens up a space for lobbying in place from an investor's perspective, where what are this company's ties and what is its level of favoritism from the executive branch is going to be a determinative factor in looking at success. If I were thinking from an investor's perspective, I might spend the next week or two studying Hungary and the corporate behavior in Hungary and understanding how companies that were close to Orban were favored, because the analogs to how that will operate in the United States are looking increasingly clear and increasingly important.
Hey, Ed Mills, come on back in here. I want to specifically go to energy here, because you pointed out in your note, and we also did hear from the president in his inaugural address, the idea of drill, baby, drill. Do oil companies want to drill? Does the U.S. need to drill? Does the U.S. need more of its own fossil fuels to be extracted from the ground?
Maybe is, I think, the best answer there. We hear from a lot of energy companies. I've talked to our energy team. We host these companies through kind of conference calls at Raymond James. And what they tell us is capital discipline is the number one issue for them. It is not actually necessarily the best thing for some of these companies to have much lower energy prices, especially on oil. Here in the United States, there are break-even prices that are higher here in the United States than globally. So we're in about a sweet spot right now for the price of oil. If there is an exogenous shock, if there is some sort of geopolitical event, to the extent that there is availability of more lands to lease and to drill, that's probably good for the world markets. On natural gas, unlocking some of the natural gas that has been trapped geographically here in the United States probably is something what those energy companies would like to see. They'd actually get higher prices if there are more pipelines, more ability to export it. We're just having really inexpensive natural gas due to that geographic boundary. But the question I get from investors at Raymond James is, if that goes too high, is that something that Donald Trump walks back on? Because certainly he would not want to see more exploration lead to higher prices.
Yeah, it's kind of tricky, right? Because if it's too low, it's going to be cost prohibitive for all of these energy companies to actually drill, baby, drill, if you will. But so it's kind of this funny balance. Gautam, I want to go back to you because you mentioned to watch Viktor Orban of Hungary, companies close to the president, and kind of comparing that to President Trump, companies, executives close to President Trump. Having said that, are the financial markets, the U.S. financial markets in particular, kind of a gut check on President Trump's policies?
I think the bond market is likely to be the sort of, if it decides that we have the return of the bond vigilantes in the United States, then I think you're likely to see that be a big check. But my read is we're still pretty far away from that. The United States' unique position on global markets gives it an enormous amount of fiscal slack. So my own sense is that the
U.S. exceptionalism, right? The U.S. exceptionalism.
U.S. exceptionalism in every way. We always forget what that means. That it just means the U.S. is different. It doesn't necessarily mean better or worse. It just means different. And the U.S. is very, very different in every possible way. So here, President Trump has a lot of space despite deficits with all that sort of stuff. And financial markets are likely to also react, as we know, when he say massive deregulation. The short-term benefits of that are pretty large. The long-term costs, the sort of things we see in 2008, you might not feel them for a while. So that might be the next person's problem.
Ed, let me bring you in on that point, this sort of short-term versus medium-term and long-term. And I think that the message of the day, the message leading up to the inauguration today, has been one of urgency on the president-elect, now president's part. He's going to sign all these executive orders. He's going to make all these changes. What's your sense of how long it's going to take until we feel the results of these executive orders? So let's take, the ones having to do with energy today. Let's maybe step back and talk about trade, even if those aren't signed today. When do they become things that you feel like you will have clarity on? How long is it going to take for you to get that kind of clarity on some of these policy proposals that the president's been talking about?
It's a really great question, because these are some of the things I've been having conversations with folks in and around now President Trump. One of the things they said is back in Trump 1.0, they feel as if it took too long to implement some of these policies. They took 3 years negotiating a trade deal. We called it the Phase 1 trade deal with China. And before the ink was dry, we had COVID and Trump lost, and it was never enforced. And so when I talked to them, they warned me that some of this is going to come faster this time, because they don't want to wait 2-3 years. So I would certainly think the first couple of months, we're going to have a lot of these announcements. Second half of this year is where a lot of it is actually going to be felt. And then I think next year is where Trump, the deal maker, comes into play, and we start getting more of those deals. And then on the regulatory agenda, normally that's a really long slog. And a lot of people that I talk to at Raymond James, they say, he promised all this deregulation in 1.0. How are we going to get it in 2.0? The thing that I think people are missing is how fundamentally the Supreme Court has upended regulation. And there is an ability through kind of a change to statute of limitations restrictions to challenge all of these rules. And with some other changes at the Supreme Court, those rules are going to come off faster than what the market anticipates. And so that's where they think that they can have a earlier impact in Trump 2.0 and in 2025 versus what they had in 2017.
I mean, Gautam, do you feel like you have a clearer picture of what a Trump second White House is going to look like, or there's still a lot of questions? I mean, I feel like all of the conversations we've had since the election after an initial market bounce was that there were still a lot of questions about what will be implemented, what will Congress agree to sign on to, what will be carried out in these executive orders. So do you feel like you have some more clarity here?
It depends on the issue. On tariffs, I think we have clarity. He's going to do it. And I just note that what happens there is companies will be able to go to Trump for exemptions to tariffs, and then there will be side payments and things like that. So that becomes a much more complicated, much more political game than it used to be. But there are lots of issues where we just don't know. We've already seen a huge fissure within the MAGA movement between Elon Musk and his tech, the tech powers who really, really like high-skilled immigration, and the rest of Trump's people who really oppose it. We know in the first Trump administration, there were massive cuts, not just to illegal immigration, but to skilled immigration. It was really, really hard for people with PhDs to get into the United States, too. We don't know if he's going to do that again, and that looks like it's going to be the first major fissure in the coalition. Who wins that is completely up in the air. No one knows. I mean, even Donald Trump probably doesn't know yet.
Appreciate both of your time this afternoon. Gautam Mukunda, Executive Fellow at the Yale School of Management, Adjunct Associate Professor at the Fletcher School of Law and Diplomacy, also the author of Picking Presidents. Also Ed Mills, Washington Policy Analyst and Managing Director at Raymond James.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
I want to go now to someone who's a student of all things presidential and politics. That's Wendy Schiller, Professor of Political Science, International and Public Affairs, Director of the Taubman Center for American Politics and Policy at Brown University. Professor Schiller joining us now from Providence, Rhode Island. Professor Schiller, let me just start with these two addresses and what you learned from them. We were talking just a moment ago about how if you look at them in complement, they were radically different. Yes, we got some detail in terms of what the president's priorities are going to be here, but what stood out to you sort of listening to them in complement, in parallel?
Well, what we always see is that Donald Trump doesn't do as well with scripted addresses. He's sort of flat. He is methodical, but he doesn't have that freewheeling, charismatic energy that really marked his whole campaign trail, and in fact, his whole 4 years outside of office. So that was really the striking thing. It's just the tone is so different. He really feeds off a crowd, or at least sort of distance to a crowd. But, it wasn't quite as dark as the first Trump administration inaugural address. And, that's because I think the president is looking now at history. I mean, he's constitutionally prohibited from running again. He may seek to try to overcome that, but it's a pretty big barrier. And now he wants to actually accomplish a lot of the things that he's promising. So that's the sort of difference in tone. He reverts, I think, when he gets into a big crowd, but he understands that he wants to expand presidential power. And presidential power, by the way, right now is pretty large. I mean, it's been expanding for many years under different presidents, and he's ready to take advantage of that, as we're about to see with all these executive orders.
What's interesting too, Wendy, what struck me this morning is that President Trump is planning to delay unveiling China-specific tariffs. This is something we kind of expected out of the gate. Does that already tell us that maybe what we heard in terms of on the campaign trail and leading up to his second term in the White House, that maybe things won't be as extreme as we anticipated?
Well, it depends on where you are. I mean, declaring that the federal government only recognizes men and women, for example, to some communities might seem fairly extreme. So on social policy, certainly border immigration policy, defining that term extreme is going to be something that we're all talking about. But certainly economically, I think he is listening at the moment to his advisors saying, you've still got inflation. And if you impose lots of tariffs, that promise you're delivering to the American people in your inaugural address inside the Capitol that said you will defeat inflation, sounds like Gerald Ford from 1976. But, if he wants to do that, he can't cause inflation at the same time. So I think that's something to look at. And in terms of deportation, same thing goes. You deport millions of people who are occupying jobs, you'll have a job shortage, or you'll have to raise wages, which will also increase inflation. So it seems like he's listening for the moment to people who are telling him to go slow there.
It does, Professor, but he did also say in his inaugural address today that he will begin sending people back from the United States to where they came from. Does it seem like he will moderate that policy at all, given that you think it could be inflationary? And you're not the only one.
Well, Tim, I think that it was a good combination by his speechwriters of saying, he's going to stay true, deport people. But we've been hearing for weeks now that they will start slowly. They will try to deport people who have been arrested, not convicted necessarily, but arrested of any kind of crime. And he said he would go after gang members that are here undocumented. So that's the first sort of set. And at the same time, closing off the border now, as Biden has already done really since June, closing it to these asylum seekers, and the stay in Mexico policy will be reinstalled. So that will diminish border crossings already. And I think in terms of illustrating what he's doing and being effective, if he can do those two things and get those things done in the next couple of months, he may not have to do all the other more extreme measures that he's been talking about.
Wendy, how about the power of these executive orders? We've talked a bit about how many have been used in past administrations. Heard that just a moment ago from our colleague Tyler Kendall about the first time he was in office, 55 in the first year. Talk a bit about the tendency to lean into these more, and also when we get these dozens after dozens of them, how should we understand them as sort of binding, what they may or may not do?
Well, there's two things to think about here. One is this is signal sending, and it's signal sending by the Trump administration and his advisors to Congress and the Supreme Court, as well as the American people, that he will try to use executive power to do what he wants to do, and he may not heed Congress or the Supreme Court in trying to do it. So he's really pushing the boundaries of solo, unitary executive power. That's a signal when you're doing that 100 or 200 times on the first day. And as you well know, David, getting the federal government to do anything is very difficult to do. So, implementing and showing the American people that you're going to be effective here on so many different policies, when you're also planning to fire a lot of federal employees or take away their job security, that is going to be a pretty neat magic trick, and that's going to be difficult to accomplish. But maybe he doesn't have to do all of it. Maybe he just has to look like he's trying to do some of it and come away with some short-term victories.
Hey, real quickly, last question here. I'm curious, is Donald Trump already a lame duck president? And is the clock already ticking on getting things done?
Well, Carol, I think that you've seen the Democrats, they'll call President Musk to irritate Trump, but they're not calling him a lame duck because they don't want to irritate him further or anger him. I mean, there's nothing worse than being told you're ineffective on day one after you've had a pretty big political comeback. So people are avoiding that language, and I don't think this is exactly right. He's trying to use executive power, and you don't need Congress, you don't need political support, you don't need public opinion. You just need the pen of the President of the United States. And that's where I think Donald Trump will try to make his mark and make sure that mark is indelible.
All right, going to leave it there. And I do wonder what we lose as a democracy when we use so many executive orders. Wendy Schiller, so appreciate it. Political science, international and public affairs professor and director of the Tauman Center for American Politics and Policy at Brown University. All right, so we know President Trump talked about his domestic agenda a lot.
Yeah, he also touched on global issues, saying he will be a, quote, peacemaker, while also talking again about plans for territorial expansion. The Gulf of Mexico, for example, becoming the Gulf of America. He talked about taking back the Panama Canal. Let's get to our guest, Tina Fordham, co-founder and geopolitical strategist at the advisory firm Fordham Global Foresight, joining us from London this afternoon. Tina, certainly appreciate you staying up a little later for us. Give us an idea of how you think the U.S.'s role will be in the world during the second Trump term, given what we saw in Trump's first term, but also how maybe his rhetoric has changed during the campaign and even what we heard from him today.
Thanks very much. Well, I'm kind of listening through two lenses. One is an American abroad, and the other is, the head of a geopolitical advisory firm talking to the C-suite around the world, and thinking as an American, the comments that followed the inauguration were very much focused on the domestic audience, on immigration, on the kind of quicker wins, right? That blizzard of 100 executive orders, which, is really designed to show that the Trump administration means business. But when we look at how the rest of the world is observing what's happening today in Washington, it is a really mixed bag. I was looking at some data from Ipsos on expectations from global publics on how positive they thought the Trump government would be for their country. And it's a very interesting inversion of what we would have seen in the past, in that traditional American allies in Europe, also Japan and South Korea, don't think that Trump will be very good for their country. But BRICS countries, including China, despite the tariffs, and Russia, where obviously the U.S. has pretty significant sanctions, Brazil, Saudi Arabia, India, expect that Trump presidency will be good for their country. And that speaks to the extent to which traditional allies are really concerned that they are going to be on the sharp end of this White House's policies.
How do you react to the expansionary rhetoric that we heard during that speech? Tim mentioning just a second ago the fact that we heard about the Panama Canal again. I'm not sure if there was a mention of Greenland, but we've certainly heard it since that was first a glancing mention a couple of weeks back. How do you process that? Yes, as the head of the consultancy that you run, as somebody abroad, do you take those comments seriously, or is this something that's kind of plastic at this point, something he's tossing around, but very well may turn into a real policy proposal by this president?
Well, I think that Americans of a certain vintage will remember the Monroe Doctrine from civics classes, which don't exist anymore, I don't think, and Manifest Destiny. So without kind of over-normalizing this very surprising comments that Trump has made, some of them quite ludicrous, like the Gulf of Mexico becoming the Gulf of America. They do have roots in 19th century U.S. foreign policy, which had an almost kind of a divine, right about it, about the U.S. right to prevent hegemons anywhere. And of course, this goes back to wanting to prevent Latin America from being recolonized by Europe. But again, I don't want to, kind of over-intellectualize. I just mean that a lot of this isn't new. But what's interesting is that none of that, what you mentioned, Greenland or the Panama Canal, were mentioned during the campaign. So, did this come from out of nowhere? Well, who knows? But there is going to be a European summit on February 3rd, which the UK will participate in. And the plan had been, at least for Keir Starmer, for example, to talk about a reset, which post-Brexit is something that growth-constrained Britain really needs. Well, now that agenda is going to be pretty much hijacked by how to respond to Donald Trump and these latest comments.
Tina, what's this going to mean, especially for American global CEOs? And I just think about, antagonistic efforts, whether it's to China or other nations, expansionary policies, for the likes of some of those big tech CEOs that were actually there in the Capitol Rotunda. Tim Cook, Sundar Pichai of Alphabet, Elon Musk, Mark Zuckerberg. They all have business around the globe. So how does a Donald Trump and his administration possibly complicate their efforts?
Well, if you're not a U.S. tech titan, things look fairly bewildering, right? And I think one of the most consequential impact of having Elon Musk in that seat, in such a privileged position, is that Musk is very pro-China. And so, the extent to which that puts a damper or constrains what Donald Trump has said historically, going back a very long time, about his antipathy toward China, will be very interesting to see. I think unless you are, really kind of trying to play the U.S. dollar as a global business leader, you're going to want to wait and see a little bit, because, executive orders are going to be in the press. What are the things that are not said? What are the things that are hard and are going to take a long time? Clearly, Ukraine is one of them. And we're now seeing, didn't Trump say a study group would be convened to look at tariffs on China? Again, U.S. allies are going to hope that that some kind of caution prevails with regard to their treatment too.
Right. We also did see Putin say that President Putin is open to dialogue on Ukraine with Trump. That came out a little bit earlier today. Tina Fordham, thank you so much. So appreciate it.
This is the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Meantime, Donald Trump intending to sign an executive order that recognizes two sexes, male and female, and also taking action to roll back some of those DEI efforts in the federal government. In his inaugural address, though, President Trump took a moment to honor Martin Luther King Jr. and his legacy.
Today is Martin Luther King Day, and his honor, this will be a great honor, but in his honor we will strive together to make his dream a reality. We will make his dream come true.
Someone who's working to achieve racial and gender equity across investing is Daryn Dodson, managing partner at Illumen Capital. Daryn joining us once again from Oakland. Daryn also on the board of Ben & Jerry's. Daryn, always great to check in with you. Thanks so much for joining us on this Monday. Given what we heard from the president now, what are your expectations, given that his administration will make this dream a reality that he mentioned, versus what he said publicly, what he said today about executive orders when it comes to how he thinks about DEI?
I think that the challenge of those that would be fully against DEI is that they're also against from what we've analyzed at Illumen Capital, economic returns, also market optimization. They're against Nobel Prize winning economic value within corporations. Also, we also see they're against some of the basic underlying principles of modern portfolio theory. So I think that what leadership looks like now is figuring out ways to embrace some of the important ways of addressing biases towards people who are overlooked and underestimated within corporations, and unlocking that to achieve prosperity, like Martin Luther King so poignantly put in a very similar way from a similar place in Washington, D.C. that Trump is in now.
Daryn, where are we on the spectrum of companies adopting and embracing DEI policies? We're talking here, of course, about this in the context of the new and past president. But more broadly, I mean, there have been so many changes afoot. I think back on that interview that Mark Zuckerberg gave with Joe Rogan, in which he talked about the need for more masculine energy in companies. It strikes me that there really has been a regression, a move backward here. And I wonder how you process that and sort of are thinking about ways in which to, again, get this back on the radar of executives and boards and make it something that's not seen as, I mean, even a hot button issue is putting it mildly here, but something that I think a lot of companies are kind of studiously avoiding at this point in time?
I think one way to put it back on the radar is to do what Wharton and Stanford Business School have done, which is put excellent leaders at the helm, including Dean Erica James. And as of last week, Dean Sarah Soule, the first woman in a 100-year history of Stanford Business School, where I have the pleasure of serving on the faculty. So every young person around the country, whether they're women or men or boys or girls, looking at the future of business leadership can see themselves either being managed by an extraordinary woman in leadership, or also, seeing that they could become, dean or CEO. I think that's why companies like Apple and Costco are stepping forward at this moment. And what I've always learned is that when we're in moments like this, it's not that character is built in moments like this, it's that it's revealed. And I think it's powerful to see these companies revealing their character and not just kind of unfolding what they've stepped forward and committed to over the last several years.
Daryn, what are you seeing, though, on the financial side of things when it comes to racial and gender equity? Are you still seeing initiatives, the money, follow the money? Is it going towards those efforts? Does it continue to, or are you seeing a slowing down?
We've seen a number of foundations, and, Apple seems like a good company that has created a lot of economic value over the years to be continuing along the journey. So economic value and DEI, I think, for a very long period of time, especially as we look at the biases and heuristics that Warren Buffett and Charlie Munger talk about within investment decision-making and processes, and detail out in innumerable different biases. But we still think that one of the greatest overlooking and underestimating of financial value in economic markets is when race and gender is present. So that's a really important aspect of continuing down the process and enabling investors, some of the largest investors in the world, to continue to find latent value in economic markets.
Daryn, I'm wondering if you think that this could end up being a problem the market solves itself without actually regulations or rules coming into focus, because you've been on with us many times over the past few years, and you've shared with us outperformance of investments that you've made and that you haven't made as a result of who is leading these funds or who is leading these companies. Is this something that the market can solve because people understand there is value there?
So it really can't be solved without some type of intervention. And the reason why is bias is something that's unseen. So by naming that and working effortfully and monitoring it, as Daniel Kahneman talked about in his Nobel Prize winning research, we're able to really ascertain what those biases are and then build systems to address them. So 1.3% of $82 trillion is managed by women and people of color in global asset management and the global asset management business right now. And part of what we see is, despite 40 years of at or above performance of women and people of color, asset flows are not going to match that outperformance like we would expect in an efficient market. So what that tells us is we have to double click and look at those biases that asset allocators, many of them unintentionally, apply and miss economic opportunities to grow their beneficiaries' portfolios and to really unlock economic value for their clients, et cetera.
Hey, listen, just 10 seconds. Daryn, are you more hopeful? Or are you more nervous?
Well, one of the things that I think, well, on a day like today and celebrating Martin Luther King's birthday, a person who was assassinated for the things that he believed in,
right.
It's great to be working on a mission to address these fundamental problems of bias in the global asset management business.
Agreed. So glad to get some time with you on this very important day. Daryn, thank you. Daryn Dodson, managing partner at Illumen Capital, joining us from Oakland, California.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Back with us is Ed Price. He's former British trade official, now non-resident senior fellow over at NYU. He has advised members of the European and British parliaments, writes regularly about politics, economic policy, and more. We are so delighted to have him back in studio. How are you?
I'm very well. How are you, Carol?
I'm doing well. We're kind of taking everything in, trying to assess what the next few years look like. How are you thinking about it? Let's start with geopolitics. Since we still have, obviously, we have a ceasefire here in the Middle East, but we're watching that very closely. We still have a war between Russia and Ukraine. We still have conflict or stress, I will say, between U.S. and China relations. We could go on and on. Mm-hmm. So how do you see it now under a second Trump term?
Donald Trump is right when he says he could probably avoid World War III, but the transaction in exchange for World War III is probably something to do with the Republic, something to do with existing U.S. soft power. So it's not a freebie. What I mean by that is that he has introduced this idea of an imperium, absolutely bald, absolutely simple. There it is on the table. If we take Greenland and Panama's slightly different, but if we take
should we treat those seriously?
His team used to say, take him seriously, but not literally. I think we should take him literally and seriously now, honestly. I do think that's something that he could do, might do, would do. Truman thought about it during the Second World War. President Johnson back in the 19th century thought about it. It's a meme. But if he did that, of course, I'm not sure that we wouldn't lose more in our soft power with this, China and Russia and them turning around and saying, well, look, it's fine to do that sort of thing then we would gain. I don't know what it is in Greenland that we would gain versus that.
I was listening to Pod Save the World, and Ben Rhodes, who hosts that, was talking a bit about presidents through history and how acquisition of territory is something that kind of puts somebody into the history books automatically. And I was kind of listening to this speech today, watching it unfold with kind of an eye to that. And I wonder how you think, we've talked a little bit about the Monroe Doctrine, which I wasn't anticipating us talking about already on the show. But
Back in history class.
But do you see similarly a president here who is more cognizant of his place in history than he might have been the first time around?
Yes, absolutely. Absolutely. I think that's a good observation. Donald Trump would like nothing more than to be added to Mount Rushmore. I've been there, there's space. And he would like nothing more than to be considered a strong leader. I almost said strong man. Mm-hmm. Okay. So I think he is thinking about that. Now, if we want to be entirely balanced, there is some sense to expanding territory, right? Inverted commas. That has been done in U.S. history. Louisiana Purchase, sure. Mexico, California, and so on. It's just, as I said before, what would be the cost now? Now that we are in 2025 and we have a predominantly rules-based order, at least for now, what is it that we gain from Greenland and Panama that we lose with Taiwan, Ukraine, and wherever else? And I guess, I came in and said I'm the global elite. I don't think that's a good trade.
Well, help us unpack that a little bit, specifically with regard to Greenland. What would we get as Greenland as an asset to the U.S.? And would the U.S. be able to do that with soft power?
The way I would have done it is I would have called Denmark. I would have said to them, listen, you're tiny, we're huge. Why don't we give you the 600 million or whatever it is, or double it every year? You don't have to worry. We already have bases. We can finagle it. And I think there are many ways that the United States does that around the world today anyway. The United Kingdom in some ways is a garrison. Germany is a garrison. Japan was basically conquered, right? So we already do this. We don't need to say that we're doing it. Now, if we did, again, this is science fiction, but if we did say, right, turn the troops over to Greenland, it's ours now, that would inaugurate all sorts of hell in the world because, of course, other people would do exactly the same thing. You'd have Japan would have to get nuclear weapons immediately, probably Germany as well. God knows what Iran would do, and the Monroe Doctrine aforementioned would have to be enforced.
Mm-hmm. Okay, so let's go to Panama and your anticipation of what happens there. Does he have some points to be made here, or?
I think the Panama Canal was designed for naval purposes, right? It's so that we can move our fleet around the world. That was the original Roosevelt's idea. I don't see that it's necessary right now to say that we can't do that. I think we can. He said something about China controlling the canal.
Right.
He did
I mean,
say
for goodness'
in the second
sake.
speech, in the inaugural part 2, yes.
Yes, what an address that will last echo through the ages. No, I don't, and I've been Googling that, trying to find out if that's true. I don't think it is true, right? No, I don't think it's true. So there's all sorts of nonsense. As I understand it, the treaty does allow us to go back anyway if we really need to. But I guess the point for me is that as we look at Trump's vision of this American imperium, it contradicts so many of the macroeconomic policies that he's actually also floating. For example, keeping the dollar standard. This is one, I don't know what you guys think about this, but he says on the one hand, I want to maintain the international dollar standard, that's critical. But on the other hand, I'm going to start denying other countries, the dollar through these incredible new tariffs. That ultimately doesn't jibe, right? So there are these huge contradictions running through this thing. I think we should take him seriously in everything that he says, but they don't make sense.
We've talked a little bit about tariffs and trade policy, and I wonder how you see that factoring into the conversation that we're having here. So if we take your lead here on this American imperium, what do you make of what he's floated thus far? We were kind of anticipating maybe some more meat on the bone today with these executive orders. Doesn't sound like we're going to get one on trade policy in particular, but do you see the rhetoric as punitive for the point of negotiation, punitive because he intends to show force to these allies and come whatever may? How do you process sort of what he's said so far? How much does that bombast or rhetoric translate to actual policies, do you think?
I think he would. Listen, I don't think he understands what a tariff is. Okay, I might get in trouble saying this. I think he thinks that a tariff is a great big stick that you can permanently beat your opponent over the head with. I don't think he understands that the supply side over time would shift and these supply chains would change. Right. And that goes the same for the currency that other countries need. They wouldn't get as much. Okay, so it really doesn't make sense. If he wants to take his own tariff policy seriously, he needs to continue and expand Joe Biden's industrial policy, right? Because then you quickly develop your U.S. supply side. You get these cars he's talking about. You get all that going. And so I would suggest that he takes this seriously because he doesn't understand what he's saying. All right, so it's all very well and good for me to sit in your studio and say that as a commentator, right, as a punter, but it doesn't make sense, particularly not against what he's saying about the dollar standard at all.
So markets certainly are, and investors are pretty smart, and they will parse through some of this. But when you're getting conflicting messages, what do investors do in that environment? Like, how do you figure out what's reality?
I would imagine that sophisticated investors, more sophisticated than I, are wondering about when to get out of anything, right? And you can follow this narrative, this Trump curve up, and we saw that with equities, but you're going to start seeing these contradictions appear, and at that point I think people will start getting out of things, they'll exit. I'll give you an example. Scott Bessent, okay, Treasury Secretary pick, extremely smart, erudite guy. He said recently that tariffs are not inflationary in the aggregate, making reference to the Chicago School of Monetarism. And you scratch your head and think, well, my goodness me, like, that's not how Trump supporters or voters think, right? So there is this sugar rush. I think there will be some excitement. We've seen that in markets, you're right. But as these contradictions start working their way through the system, as you see this potential civil war between the sort of Trump purists, MAGA purists, and the established, sensible Republicans who are also in the cabinet, as you see that sort of come to a head, I think that you'll see that in markets. And I'm not ruling out a financial crisis at some point in his term. Truly.
What would trigger that financial crisis?
And what kind of crisis?
Well, first of all, it might be that the Fed turns around and says, look, CPI is going in the wrong direction. It's okay right now, like 3.2.
We actually have a story in the terminal that while it's not popular, that the idea that the next Fed moves or possibly in the future could be higher.
Well, this is what I'm saying. Right? I think they could be higher, right? If they're watching the economy. Unemployment at 4%, so that lobby's against that. But I'm not ruling this out. And then at that point, of course, Jay Powell would have to pull the rug out of anything that's considered a bubble. So Jay Powell, not Trump's friend, and markets, nobody's friend if they decide that they're going to pull the rug on you anyway.
When you look at the international order as it stands, who are the individuals that Donald Trump can have a conversation with, or I guess conversely, who feels like he or she can have a frank conversation with this new president about multilateralism, international affairs? I mean, we've seen him palling around with Javier Milei, who's in town for the inauguration as well. But more broadly than that, who has his ear? With whom does he have a kind of can he have a dialogue about the international order more broadly?
I was going to answer nobody.
Yeah.
I was going to answer nobody. I don't think that's his plan. I was going through the list of world leaders in my head. Obviously, he wants to sit down with Putin and talk about ending the war in Ukraine. He probably wants to call Xi or visit Xi and talk about Taiwan. But I don't get the sense that this is the art of the deal. I get the sense that this is the art of the act. And he's just going to start doing things. He's also on the clock, right? I mean, 2 years from now, there'll be Senate elections. If he loses 4 seats, that's trouble too. So it's a really good question, but I think the answer is a bit disingenuous. Nobody. He's not intending to do that.
So then what does it mean for something like the Russia-Ukraine war? So if he does sit down with President Putin, how do you possibly see that scenario playing out? Because the U.S., as we know, has been a big backer in terms of financial and weapons, right, in terms of for Ukraine. So how might that ultimately end?
Well, I don't
does it?
Well, this is the question. I don't think we were a big enough backer. I think the United States fundamentally mishandled this question in Ukraine. We seemed to accept Putin's nuclear framing. He said, listen, I've got these nuclear weapons, so I'm going in. And we sort of said, all right, then we'll give out little bits and bobs of weapons. I think I've said this before on your show. I just would have handed everything to the Ukrainians.
Just be all in.
All in. Long range, go for it.
Would you have sent American troops to have boots on the ground there?
Absolutely. I would have closed the airspace. Absolutely, I would have. And I think if you present weakness to dictators, history's taught us that you get more in the way of annexations, you get more in the way of aggression. So I think, so to answer your question,
which is exactly what Putin did, right? I mean,
exactly what he
second
did.
time around, yeah.
Exactly what he did. And we should have slapped him in 2014 over Crimea, to be honest with you.
Yeah, I think we're also going to be listening and watching to see if indeed any of the signing of those executive orders and actions come down, whether or not we see and hear anything about the January 6 individuals, some who are in prison, and whether or not there is some kind of pardon for them. So there's a lot to be watched for still in terms of specifics coming out of the new president, the 47th president of the United States, of course, Donald Trump. So we're going to continue monitoring it and take you back there. In the meantime, we've been talking with Ed Price, former British trade official, non-resident senior fellow over at NYU. And as we remind you, he has advised members of the European and British parliaments. We were talking in the break about kind of where we wanted to go next, Ed, and I do think a lot about U.S.-China relations. I mean, United States and China, the two biggest global economies, when they do different things, a lot of other countries, a lot of companies feel it, a lot of investors feel it. How do you anticipate that relationship evolves during the next couple of years with Donald Trump?
It's a great question, Carol. So you have two emperors eyeballing each other across the ocean, both of whom believe indeed, that the other should bow down to the other. That is a way of saying, of course, that Xi Jinping and Trump believe themselves to be powerful individuals who deserve respect from the other. And it's another way of saying that both China and the US consider themselves to be the conservative power. It depends on the horizon, right? So if you look at things from a sort of 100-year horizon, the United States is the conservative power in the region trying to uphold the existing order. If you look at things from a 300 or more year horizon, of course, China was there first. And who on earth are we, right? We're a sort of flash in the pan. So China-US relations are extremely complex. I think they will get more combative. And ultimately, the pinch point will be something in the South China Sea or Taiwan.
You say relations will get more combative, but we saw the vice president, essentially, of China in the U.S. today for the inauguration. We saw the TikTok CEO as well. We saw the president saying that TikTok will not be banned under my watch, at least for the first 90 days. And then now we don't get tariffs on day one, more tariffs with China on day one. So it seems to me it's less aggressive than a lot of people thought, at least in the weeks and months leading up to this.
When the Chinese come to the United States, my interpretation is that we're having an argument. I don't think that they would come if we weren't. And if they weren't here, I would be more relaxed about the forward path of our relationship. It's axiomatic.
If they weren't here.
Yeah, I'd be like, okay, so when you really argue with someone, you go over to their house and say, we need to talk, right? And I would assume that's why they're here. Xi Jinping was invited, by the way, and didn't come, which probably would have been a breach of protocol on some level. But there is a fundamental difference between the United States' current interest in the South China Sea and in the world versus what the Chinese are proposing. Right now, we are on a collision course. As I said earlier, President Trump, to be fair to him, sees this, understands this. It probably takes a con man to spot a con, and I think that's why he put his hand up earlier in history in 2016, 17, 18 about tariffs. But to be fair to him, he sees the world through realpolitik lens. He sees the world through a power lens. He knows what the Chinese want to do. He might avoid a conflict with China, but it would probably mean giving them what they want in exchange for a freer hand in the rest of the world. I don't think that trade works because I think we're already on top.
I had an opportunity to have some conversations with the outgoing Secretary of State and Treasury Secretary, and what each of them stressed is the importance of rebuilding and reanimating a conduit of communication, because I think that they saw what you're alluding to, that is this collision course, a fear that if there was no red phone to pick up or way to contact a Chinese official or an American official, vice versa, that could be really cataclysmic. And something both of those individuals told me was they were really trying to impress upon their successors the importance of having that. Are you at all optimistic that that view won out, that there can be this kind of pugilistic rhetoric, but there may be, in a Marco Rubio or in a Scott Bessent, an awareness of the fact that at least having a means by which you can talk to your counterpart is useful from a negotiating standpoint?
So the wonderful thing about the Bloomberg terminal is that it is information rich, as our markets, and your market listeners have so much information at their fingertips. My limited experience of policy and policy making is that it is information low, information poor. And I don't see that we have enough of a conduit with the Chinese right now to avoid that sort of thing. I mean, Khrushchev basically sent Kennedy a fax, right? Well, 2 faxes. And I don't know that we are at that level of communication or understanding. There was an equilibrium between the United States and the Soviet Union. Both of them were Enlightenment projects in a sense. One of them was a bit perverse, but they were about managing a country, essentially, right? The Chinese, I think, have a different view of the world. They have a civilizational view of the world. And I don't know, and this is our fault, I don't know that we understand them properly. Or that we truly understand them, or are always respectful. Again, I mean, there's one word that you can throw out there, opium, and tell an entire story of how the West hasn't always been respectful to the Chinese. That's a long-winded way of saying I don't think that we are communicating with them properly, and I don't feel confident that we can.
To be fair, President Trump, pushed back with tariffs on China in his first term. They were carried over into President Biden's term. And if you think about China, I think that's fair to say that both sides of the aisle agree that there needs to be some pushback. So having said that, are we just at this point where, for 20, 25 years, I feel like from the beginning of my career in business news, it was all about making sure that global multinationals were in China, U.S. big firms were in China, and now we're starting to rethink what needs to be going forward. And whether it's the pushback against globalization, pushback against China specifically, I mean, is it just a new chapter that's being created in the U.S.-China relationship that lasts for, I don't know, the next?
It could be. I think it's a bit of a conundrum, because on the one hand, businesses and American capital need as much positive exposure to the Chinese economy of scale as they can get still, absolutely. And I think they would be loath. I mean, if you look at, I don't know, JP Morgan, or what have you, like, they would be loath to unilaterally pull out, particularly if their competitors were still there. So this is economics, right? And ultimately, JP Morgan pays a lot of tax, and that goes into the US military. So there's a conduit there. On the other hand, at some point, either through uncertainty or through executive order or what have you, there will be a moment that there is a strong case to be the first out and to cut your losses and to get away from a negative exposure to China. I think that businesses are in a constant state of uncertainty right now. They don't know how to comply. This is very similar to the Brexit process, which I sort of saw some of from the inside, where the Commission would say something, the European Commission would say something, and then the British financial services would think, should we just over-comply because we're not sure? So I don't know that China and the US have a clear glide path in either direction. I think it's a conundrum, it's a dilemma, and it's a trade-off that either way there's going to be losses somewhere.
Ed, I want to step back a little bit and talk about, we're talking investment, talk about the investment environment here for Americans and for people in the US during this next administration, during this current administration. You wrote in a recent column for FDI Intelligence over at the FT that there could be this orange gold rush if certain Biden policies are kept in place, but also certain Trump policies are enacted, but other Trump policies are not enacted. Sort of this perfect storm of like, okay, don't go too hard when it comes to deportations and immigration controls, but also go ahead with those tax cuts. What's the sort of best case scenario here?
Well, I would remind your very erudite listeners that the gold rush was a disaster and not many people got rich. I think the best case policy is that Trump sort of redoes Reagan, that there is sensible deregulation, that maybe we pull back on Basel III a little bit, and all the rest of it. Like we've read it, and it's in my column. It's in everyone's writing about what he could do that would make sense. And if he manages to say we're going to get out of the hair of business a little bit, we're going to calm down on tariffs, we're going to remove criminals, but not the labor upon which this country is foundationally built. By the way, that labor is not always American. Then there is a way of sort of reading the Trump runes where you can say this might be quite good. And I think that's what's happening now with the markets, back to your earlier point, Carol. Mm-hmm. The problem is if you blow more dust off this big tablet that I've now invented, and there are further runes, you can see again it doesn't add up. There is a fundamental contradiction between cutting people's taxes and lowering the available number of goods. I mean, that's the money-goods ratio, as everyone points out, that's inflationary. So we're in a spot of bother with Trump. I think if you scrutinize what he says, if you just feel happy about it and have a nice can of orange soda, you should be fine.
There's on occasion when the Wizards play or the Capitals play, they'll bring in a desk, I guess, for the sportscasters. We're seeing that now in a different way at the Capital One Arena as a wooden desk with the presidential seals being brought out to the floor of the Capital One Arena. Again, we're waiting to see what executive orders the president intends to sign when he's there on the arena floor. We're talking with Ed Price, and as we wait for that to happen, Ed, I want to go back to something we heard from Tina Fordham. That is, there's going to be this European summit in a few weeks' time, and whatever agenda might have been in place has been scuttled now. And I wonder sort of what the consequences of that are, of all of these other global powers having to kind of comport themselves in a different way because of the president who's in the White House. And I think back on when I was covering the G20, the U.S. had this very reduced presence there on the ground in Rio, and you could kind of see those other countries reconfiguring the kind of magnetism they have with other countries. So the alliances were really shifting in real time there in terms of who was meeting with whom. What are the consequences, sort of exclusive of the U.S., to having the U.S. take up so much oxygen and so much bandwidth under this president?
There are only a couple of sensible things that other countries can do now. Germany, which is basically the EU, needs to rearm, which as an Englishman I think is an astonishing thing to say. Yeah. And I'll be getting some emails later, I'm sure. As does Japan. And that's a way of saying that countries, it's like this asymmetric risk, right? If there's only a 5% chance, a 10% chance that Trump is serious about half of this stuff, then you have to put more than 5 or 10% of your resources into thinking about how to deal with it. I mean, imagine if Trump sits down with Putin and says, okay, what parts of Ukraine do you want? That's fine with me. I don't care. They're yours. And then Putin thinks, well, okay, the Baltics or Poland are next. Germany has to stop making cars and start making tanks. Right? And I think the same is true of Japan. So what are the consequences for the US taking up so much oxygen? Ironically, we're going to have to go back to a world that probably previously existed closer to 1910, which is that regional powers try and look after their own interests and have a battle plan effectively for looking after themselves.
Okay. So there's a lot still to be known. And as we are watching the Capital One Arena, as we said, a desk has been set up, and we are anticipating President Trump to sign or do something, but probably sign some of those executive orders. Having said that, Ed, can you start to think about, I always think about long-term impact. And, we'll have another election. We'll have midterms in 2 years. We'll have another election, presidential election in 4 years. So I just wonder, and we have a government that has so many people in there so that things kind of move more slowly. We have checks and balances, although we're now questioning whether or not all those checks and balances are in place. What's the thing that you're most concerned about that will be a long, lasting effect? I mean, we haven't even talked about climate change or AI, which are some of the other big issues that are facing our world.
So I said this before, say it again. I don't think Donald Trump is a threat to democracy. I think he is a threat to the republic, which is ever so slightly different, but is an important distinction to make. He degrades the way we do things, codified or otherwise, that we could previously have counted on to be a part of the checks and balance system, right? For example, firing Comey. Back in the day, right? Firing Comey, wild. And so...
Rule of law?
But the rule of law is this sort of ethereal thing, right? Because it's a spirit and a letter. And I think that he's not always a threat to the letter. He took the oath today. He is the constitutionally elected president of the United States. But I don't think he likes the spirit. And this is the thing that I would really watch carefully, which is the extent to which his comportment, his manner, his worldview start to seep into the American establishment. And you start to make assumptions about, well, how would J.D. Vance behave were he president in the future?
But we don't know, right?
We don't know at all. Of course not. I can come back later and tell you I'm completely wrong if you like. I mean, that might be,
right.
that might be wise.
Is it wise for us to assume that someone's going to pick up the mantle from him and continue?
Something is being let out of the box in the American body politic, okay? It's hyper-democracy. It's the sort of democracy the Founding Fathers did not want, which is that someone who is quite combative, quite crude, and not necessarily in favor of the spirit of the Constitution is now in power. And I blame me and all of the other people, I mean, I'm a registered independent, but all of the Democratic voters, let's be honest, who thought for a very long time, 25 years, that we know best, sitting around on the coasts, sipping frappuccinos. Okay, guilty as charged. And we completely took our eye off the ball as to what matters to a lot of Americans, and this is their response.
We're speaking with Ed Price, former British trade official, now non-resident senior fellow at NYU. He's advised members of the European and British parliaments. He writes regularly about politics, economic policy, and more. As a reminder, too, we're also keeping an eye on what's happening at the Capital One Arena in Washington, D.C., where we do expect to hear from the president in just a few minutes. Ed, what happens, though, if it doesn't work? What happens if the Americans who you spoke to and you met throughout your road trip this summer, we've had you on to speak about that, you've written a lot about it. What happens if the policies from this Trump administration do not improve their lives? What's the next iteration?
I think the next iteration could be past populism, and then you would be appropriate if you were talking about fascism. This has happened in history time and time again. There is a solid backbone of good, honest people in this country who have followed the rules and really seriously been let down in the last quarter century. And that is a fundamental observation that Trump made. He's promised them the world. He's promised them to get back on their feet. They've believed him. You're asking exactly the right question. If he lets them down now and we go into this kind of like dystopia tech overlords, situation, then there's going to be hell to pay from them, and rightly so. Now, I wish that there was some third way of doing this. I wish there was a romanticized small L liberalism, small R republicanism, like the aforementioned T.R. Roosevelt, that we could get Americans interested in again. But the choice between Trump and the Democratic Party isn't working.
We are a young democracy, as you reminded us, versus something like China, or just not a democracy.
Even if we feel old.
But in terms of government.
Even if we feel old sometimes.
Is this just kind of what we need to go through to get to a better end?
I don't think
or to make our government evolve?
I think the fundamental mistake we made was twofold. One, in the 70s, a fiat dollar without a better way of controlling it. We can get into that if you want or not. And the second one was allowing China into the WTO and allowing it to be a developing rather than developed country status for too long. So these are really huge structural problems. There are now too many dollars in existence. We've enriched a potential adversary. We are in a precarious position. We imported deflation, so we're in trouble.
Ed Price, great to speak with you. Thank you very much for an extended period of time with Ed Price of NYU,
Great
former
stuff.
British trade official, now non-resident senior fellow at NYU.
This is the Bloomberg Businessweek podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.